Yeah, hi, good morning, guys. My name is Mike. I'm the CEO and founder here at Global Investments in the UK. Very nice to meet you all. I'm not sure exactly where you're watching this from, whether you're watching it virtually or if you're sat with Marcela, maybe in Argentina, in Buenos Aires, or Gökhan in Turkey. We have, I think, 7 offices around the world now, so you could be watching this from anywhere. But very nice to meet you all. Thank you very much for giving me and the guys your time today. So today I'm going to talk to you guys about, by the way, that's not me there, that's my head of UK properties, Ian. I think the presentation was originally done for him. So today I'm going to talk to you guys about our opportunities in the UK. So predominantly we are a US based investment company. So for the last 13 years we've sold 7,000 properties, and the majority would have been in the US, but very recently, I'd probably say in the last year and a half, we started selling properties in the UK. And the reason for that, very simply, was I had a lot of my investors, domestic US investors and overseas buyers. They came to me and they said, Mike, you know, we've seen this social housing opportunity in the UK. We're very interested. Is there any reason why you guys don't sell it? So I thought, that's a great question. Why don't we sell it? So we teamed up with a social housing developer in the UK, and we're selling. They're turnkey, tied to the social housing authorities, and that's what I'm going to talk to you guys about today. I think it's an incredible opportunity. I think I've been working in property now for coming up to 30 years, and I think it's probably the most hands-off investment opportunity that I have seen in selling property for 30 years. So I think it's a fantastic opportunity, very different to the US, guys. I think less risk involved. So for those people who are looking for that passive income, that residual income, and just really steady, hands-off cash flow. So the reason why this is coming about, I'm not sure if anybody knows, but the UK right now has a huge housing crisis. And as you can see here, we have 1 million households awaiting social homes. We have 29,000 social homes per year that are being demolished every year, and there's only 7,000 that are getting actually built and developed. So if you do the maths, number one, you've got 4.3 million people waiting for a house, and you've got a deficit of 22,000 per year, which is huge. So hence the reason these developers and suppliers have come in with an answer and supplying and giving these turnkey properties to investors and also for the social authorities to use for these vulnerable adults. So as you can see here, there are many unaffordable homes. Many people across the country are priced out of owning a home. Since the 1980s, construction of social housing and private homes has severely declined, with steep increases in house prices from 1990s onwards. So it's very difficult for people to buy a house in the UK. Our partners, our developers, so basically the guys that we've done an exclusive agreement from, so we have an exclusive agreement to sell their inventory for or to our investors, refurbish properties to a very high standard, so they're fully renovated before you close on the property. They work with local authorities and housing associations. They would arrange a lease between the housing association and yourself. So the lease that you sign is not with the tenant, it's with the housing association. So the housing association is your tenant for the next 25 years, which I'll come to shortly. They've been in business now for over 5 years. We've been working with them for about 1.5 years now. And I have to say, like all of the clients that have bought and are getting their rents, like it is exactly what it says. The rents come in every month. I mean, I've got some clients have come back and bought 5, 10, 15 of these houses, which tells a story, I think, in itself. They have contacts with the local authorities, and they know the market very well, of course, and the homes provide modern, well-maintained interiors and security. So it's not like they are, people think of social housing and they think, are they bad homes, are they bad areas? They're not. They're good properties in decent locations that people can live in. What is a housing association? Okay, so that's a really good question. So housing associations are non-profit organisations. They are set up to provide affordable homes and support local communities. They don't make profits for shareholders. They support almost 6 million people around England, and that's obviously growing every year. They also invest in community services and regeneration, provide support to vulnerable people, and they reinvest, which is a really key point, they reinvest all of their income in putting that back into social housing. So it's like a cycle, Housing associations receive funding from government and local authorities and use these funds to pay the housing association to house the tenants. So basically the housing association is put in place, but they get funded from local authorities and funded from the government, which pays the rent for anybody looking for social housing or vulnerable adults, Okay, the opportunity for you guys today, and I say today, but I think it's an opportunity that I think a lot of people are jumping on purely down to the fact that the rents are assured or guaranteed for 25 years. So basically you're buying, very simple to understand, you're buying a house in the UK, in the northeast or northwest of the UK, so it wouldn't be down south because obviously price points are high. But the reason so many of my investors are looking at this and getting involved is because of that. The rental agreement is in place for 25 years. So 25 years. So to me, it's not like buying a house. To me, it's not like buying a piece of real estate. It's almost like an investment vehicle. Very similar, if I could say, to the S&P 500. I invest in the S&P 500. I invest in stocks and shares. And if you look at historically what the S&P has given you over the last, let's say, 100 years, you're looking at, I would say, anything between 7 and 9%. So to me, this is like an investment vehicle that's going to give you 8 to 9% linked with inflation, which I'll come to in a second, guaranteed over the next 25 years. But the beauty of it is, at the end of it, we still own an asset. Remember, the S&P 500 is not asset backed. You put your money in, you take your return, and then you sell your shares at the end, so you get back whatever it's worth or valued at the end. This is owning a piece of real estate, so it's asset backed. The big one here, which I think, which is of course what differs it to the US market, is zero vacancy. Excuse me. So if the property is empty, you still receive your rent. It provides hands-off investment opportunities. Like I said earlier on, I think in 30 years it's the most hands-off product that I've ever sold as a company. Or even before I started Global Investments, I haven't seen anything like this. Provide yourself with monthly income from day one, which people love that idea. You put your money in, you forget about it, and you see that passive income that generates your monthly income, your annual income, that hopefully pays your bills and other things. Okay, location. I mean, the bottom line is, guys, I won't go into too much detail on this. It's not down south. You're looking at the northeast of England, which is actually funny enough where I live. I live in Newcastle. So the houses, the majority of the properties that we sell are actually about a half an hour drive from exactly where I'm sitting right now. So they're in an area called like Bishop Auckland and Durham, but really nice, decent areas, decent neighbourhoods. The one thing that I will cover is the prices of these types of houses on the market. So if I send you an address for a property from one of our social housing properties, would you be able to find a cheaper property on the market on that street? For example, I don't know, with any of the real estate agents. Excuse me, my telly just switched on there. If any of the with any real estate agents in the UK, the answer is yes, 100%. So if I sent you, I don't know, a 2-bed at £100,000, the likelihood is you might be able to find a 2-bed property on the same street in the same area for maybe £65,000-70,000. So you're going to say, Mike, well, hang on a second. Yours is £30,000 more. So that's what I need to cover with you guys. What you have to understand is this is an investment vehicle. So you're not just buying a property. You're buying the whole package. The lease with the local authorities, the fact that it's fully renovated. You have zero vacancy. They back the rentals regardless if the property's empty or not. Maintenance that I'll come to a little bit later on as well. Zero maintenance. So if there is work that needs to be done on your property, it's backed by an insurance policy with the local authorities. So you have zero risk involved in this type of investment. So that's the reason why I wanted to cover that, guys. So if you just went and bought a normal house on the same street for, I don't know, £60,000-70,000, you don't get the lease with the local authorities. You don't get guaranteed rent for the next 25 years at 9%. If something happens to your property, you do need to fix it. So the bottom line is you're buying the overall package. Okay, properties rented to a housing association on a fresh lease. Sorry. Fully managed and hands-off investment. So this is kind of the package that the local authorities would give you. So number one, fully managed and hands-off investment. Yes, it is. You don't really have to get involved at all other than send them your bank details for the rent. They're freehold property, which is really important, guys. So no leasehold. You own it in perpetuity. You can pass it to your children, your grandchildren, and so on. Full title deed ownership, full repairing and insuring lease. That's what I was talking about before. So anything happens to the property, they fix it. So zero maintenance. They're the two main risks, guys, involved in you buying a piece of real estate. For example, in the US, vacancy and maintenance. So this gets rid of both of those. So no maintenance, no management, no service charge, no ground rent, full damage cover. And the big one at the end there, inflation is linked to the rental income. So it's linked to the CPI. So over the years, your 9% would go up. I think we'll come to the numbers in a second, but I think it's around about 11% as an average over the 25 years. So you're not assuring yourself 9%, you're assuring yourself 11%. Obviously, we'd need to talk about tax, which will come a little bit later as well. So the types of houses, guys, very simple. We sell 3 types of properties. The first type is a 1-bed at £98,000. The second type is a 2-bed at £120,000. And so you got a 2-bed, for £98,000, a 3-bed for £120,000, and a 4-bed for £140,000. So I guess, again, it's not about the size of the property that you buy. I think it's about what your budget is. So if you said to me, Mike, we've got £300,000, then you could buy 3 1-beds, or you could buy 3 2-beds, or you could buy 2 4-beds. So it would be really up to you, but it doesn't really make any difference. What you want to try and do is get the best out of whatever budget that you've got available. If you've got £300,000, we can put it into 2 4-beds, or we could put it into 3 2-beds. It's going to work the same way. Also, for those people who potentially have larger budgets, so we have some investors with £500,000 or £1 million or a couple of million, private equity firms. For example, I don't know if you guys have heard of the private equity firm called Blackstone in the US. So Blackstone recently have just purchased 1,750 houses for I think something like $50 million or £50 million that are going to be used for social housing. So even equity firms like Blackstone are getting involved in this as well. So basically, if let's say you guys had $500,000 or $1 million that you wanted to invest and you thought, you know something, this is a great way of getting an assured 9% on my money for the next 25 years, then we can sit down and we can talk, and the developer that I work with can put an exclusive package together specifically for you. But that's something we would need to talk on an individual basis. Okay, here's an example of kind of how it works. So you're looking at, let's say we're looking at a 2-bed here, a 3-bed. So you're looking at £120,000 for the property. You've got rent at 9% is 10,800. Your rental income monthly is 900, and you have a 9% assured rent there. If you want to take inflation into consideration, that rent on year 25 would be 17,321. So actually, if you look at the net yield in year 25, it's close to 15%, which I think gives you an average. I think your projected ROI, I don't think you can see it there because of my face, is 281% over the 25 years. So you divide that into 25, you're looking at around about, I think, 11.5% over the 25 years. And remember, you still own an asset, you still own the house. And even if that property is only worth what you paid for it, or a little bit more, you've had 281% on your money. That's just an example of the chart giving you the same kind of figures of how it's linked with inflation, and how year 1 it starts at 10.8 and you're up at 9.7 by year 5, and right up at almost 15% by year 25. By the way, it is capped. The inflation rate is capped, I think. I'm not sure. You need to speak to one of the guys about it. I think it's around about 4%. So it can't go anything above that. Okay, the process, really simple, guys. I mean, it's a really easy product to understand. It's not about, to me, it's not back to those real estate, those key factors when you look at buying a piece of real estate. You kind of take that out, because the first thing you would look at is the location, the neighborhood. When I'm looking at the US, with the UK, it's entirely different, because you're buying the money, you're buying the package, you're buying that return over the next 25 years. So you're just buying the numbers, guys. So the bottom line, it's not about, oh, Mike, can I have a look at that house or that house? The bottom line is, if you've got £150,000, you can buy a 3-bed or a 4-bed. And if you've got £100,000, you can buy a 2-bed. So I think that's really what it's about. So the number one, speak to one of my guys or myself. Choose a suitable property that meets your budget. So that's what I'm talking about. If you've got £100,000, you can buy a 2-bed, or 150, a 4-bed. Your initial deposit would be £5,000. We work with a local solicitor on the ground. You sign a purchase contract. When you close on the property, or when you exchange, as they call it in the UK, you would sign a lease with the housing association for 25 years. By the way, if you ever did want to sell the house, which of course you can, you would sell it with the lease intact. So whoever buys the property off you is also buying that package as well, which is great if you did ever need to exit as well. Then we close and you start receiving your income, which is the nice bit about it, yeah? I'd like to just cover tax before we carry on to this, the summary here. So tax I can't really talk about because I'm not a tax advisor. But obviously one of the big questions that I think a lot of people would have would be, Mike, do I have to pay tax on the income? Well, of course you do. There's no way you can not pay tax. If you put money into the S&P 500 or stocks and shares, you need to pay tax on whatever money you earn in that period of time. So yes, you would need to pay tax. So we work with a fantastic administrator here in the UK called GetGround. And what GetGround can do is they can look at your situation and say, well, you might be better opening a limited company in the UK, or you can buy it in your own personal name. Yes, you do need to open a bank account in the UK, but a lot of people would do that with the likes of Wise, which you can set up very quickly, and you can get a sterling account. So in relation to any tax questions, the best thing to do would be for you guys to speak to one of my guys, speak to myself, and we can put you in touch with GetGram. But I think on average you're looking at around about deducting 1.7% off the 9, so you'd be looking at around about 7.3, 7.4% net. So that's after you paid your tax. But remember, if the average percentage is 11% over the 25 years, you take 1.3, you're still nearly at 10%. So it's still even with tax, it's still a lot more than what the likes of Barclays, Halifax, Bank of America, Chase would give you, which I think if you're lucky right now, you might get 0.125%. So it's a lot more than that. Okay, so summary. Very simple, guys. Hands-off 25-year investment offering 9% per annum, increasing with the CPI over the 25 years. Over the period, you will earn 3 times your initial investment and still own the property. Now that's fantastic. I haven't seen anything like that in 30 years of selling houses. In addition, you'll benefit from the capital growth of the asset. And again, I wouldn't really focus on that, guys, because remember, you're paying more than the market value for the house. That's the bottom line. So like I said before, I think I mentioned it, if in 25 years your property is worth what you paid for it, you still had 3 times your money back and you still own the house. So not bad. So I think that's about it, guys. Remember, my name was not Ian Pask. My name is Mike and I'm the CEO of Global Investments. So again, I would like to thank everybody for the time, wherever you're watching us from, whether it's Turkey, whether it's Argentina, whether it's the UK, whether it's Spain, or whether it's Farouk in Canada. Again, I'd like to thank you for your time. If you would like more information on this, I would suggest definitely setting up a Zoom call, a Teams call with myself or any one of my guys, Ian, Barry, Scott, Marcella in Argentina, Honor in Turkey, or Gökhan in Turkey, and they would be able to get into more detail with you. Or if you're ready to start looking at properties, we can sit down and we can start looking at properties, guys. So I shall leave you with that. I hope the presentation was helpful and you guys have a wonderful day. So I think that's about it, guys. Remember, my name was not Ian Pask. My name is Mike and I'm the CEO of Global Investments. So again, I would like to thank everybody for the time, wherever you're watching us from, whether it's Turkey, whether it's Argentina, whether it's the UK, whether it's Spain, or whether it's Farouk in Canada. Again, I'd like to thank you for your time. If you would like more information on this, I would suggest definitely setting up a Zoom call, a Teams call with myself or any one of my guys, Ian, Barry, Scott, Marcella in Argentina, Honor in Turkey, or Gökhan in Turkey, and they would be able to get into more detail with you. Or if you're ready to start looking at properties, we can sit down and we can start looking at properties, guys. So I shall leave you with that. I hope the presentation was helpful and you guys have a wonderful day.